To 58 and a quarters. We should have been up here in the 59s, but we were processing one of the snippets, and the computer runs a little slow when a lot of things are happening. So we had a reach up to the second standard deviation on this push up to the 59s again. E period couldn't get below the D period. We're in the F period, so let's see if we can make a target down here and close this gap at 51. We've had a round nice rally from the 53s to the 59s, 6-point range. We should be able to close the gap, you would think. We have an oscillating New York tick above the zero line, below the zero line. So we didn't break above the previous rally on the 5-minute chart that I'm looking with the tick chart. The high of that period was, of course, 60.50. That correlates to the breakdown in the C period and pretty close to the D period high. I'm not sure exactly what the D period high is. D period high is 60, so it's 50 below that. So we're underwater here on our trade already. Our 3-point stop didn't work so well last time, so we're only a quarter tick away from getting stopped out here at 60.25. I don't know what to think about this 2-point stop today. It's not working so well at all. But we'll stay tight here, Stan. Watch. I'm thinking in retrospect here, the better place to sell probably would have been at the point of control, not the point of control, but the high volume cluster up at 63. If we get stopped out, that's what we'll be waiting for. Well, we got stopped out, so we're going to pause the video here with our 2-point stop and take a look at the market a little bit. Look at that. We got stopped out. 60.50 was the support, or I should say the resistance, right up there where the D period broke below the A, B, and C period, or I should say the D period. The C period broke below the AB period. The D period couldn't get above that area. The F period took it out by just a bit. And we don't have a trade location here, which is disappointing. The tick chart, though, does show an oscillation today. There's probably a little more activity above the zero line. Lately, the volume has leveled off while we've had several attempts at the second standard deviation up here. I'm a little confused as to here this trade. I keep saying this, I don't like to trade in the mean, and I'm going to try to avoid trading around this point of control and wait till we get a little more asymmetrical. Although, having said that, this F period high looks really attractive if in fact you believe that we're going to close the gap, which is a strategy that hasn't worked so well for me. But alright, we're retesting this area. I just got done saying I didn't particularly care to trade the mean, but if you're in a trending market down, the mean's the best retracement you're going to get to trade. That's the caveat, that's the thing. Now let's see what happens up here. See if we get some cross trade initiated. If we see, well, see, you didn't get any cross trade. They're just hitting the ass now sequentially, so we're trying to break up a little bit. The next volume cluster, the high point is 63. That's the area that we'll be looking now. We're extended quite a bit on the tick chart. So at the first sign, I think, if I see cross trade come in here at the ask and the market stalls, and then you see the cross trade occur starting to hit the bid passively and then initiatively, we'll look for a retracement and try to get in. Okay, we're going to take two shorts, 61. See if we get the 61s. Probably have to take the 60, 75s. Short 62, 61. Okay, we got the 61s, two short 61. Earlier than the 63s, we might have to run our three-point stop here. We'll take a look. I don't like the fact that I'm oscillating with a stop strategy. That's uncomfortable. I need to refine that somehow, sometime. The problem is I think it's closely related to our entry techniques, and if the entry techniques aren't exact, then it doesn't really matter what our stop loss is. It'll never work. Our entries, I think, are probably, the more important of that side of the equation. G period just opened up. We're taking the 58.75s out, 58.75. Actually, we got filled at the 59, so We're out of both contracts at 59. I just didn't have the patience to sit in this trade anymore. We're in a 1, 2, 3, 4, 5, 6 TPO consolidation from the C period to the H period. Our 60-75s, they never broke it down below 57. That was the lowest they could go, and we're starting to build positive tick. So we took 3.5 points profit, 1.75 points times 2 contracts, and that was a good decision, I think. We'll just have to wait for see what the afternoon session holds, see if we can get a little more asymmetrical opportunity trading around the consolidation, unless I'm much more short-term oriented and are much more active in trading, and I'm pretty active already. If you look at the Tampa Trading Analyzer, you can see lots of trades occurring each day. Not 200 trades or anything like scalpers, but do a few trades a day. And like I say, unless I'm a lot more active, it's difficult to take advantage of these 2 or 3 point rotations. So we're just going to stand by and see if we can't get toward the day's high, or toward yesterday's close 51, and look for an entry down there. This is the area we were talking about, the 63s. We have some cross trade here. Now we just need a retracement. One point I would have gotten right in without waiting for a retracement, but we're going to try to be patient and wait for a retracement. It's the H period high, about halfway through the H period. The one thing that's concerning me, taking a short at the H period high here, and waiting for any duration, is the tick chart is prominently positive above the 0 line today. Now we have the morning session and part of the afternoon session to gauge. That might temper my decision to get short up here. It is in the process of tempering it. I probably won't do it. I'm going to pause the video. It's looking more and more like a balanced day instead of just a retracement to get short, hoping we would fill the gap at 51. If that's the case, we'll look into the A period and see where the change in momentum occurred. The 65-66 area was where the switch occurred from initiative ask to passive bid to initiative bid activity. So we're going to try to be patient and hold on for the 65s. If we see any change here, though, we'll reassess. Volume is increasing on the uptick here on the tick chart, so we might just hit the 65s. We're pushing up here to the B period high, the 64s, 65s. We're looking for some sign, some cross trade. We see a positive in the pullback column. We'll pause and look for a position. I see the block of cross trade up here in the 63.50s. We're going to take the 63.50s, 63.75s if we can get them. There's the 63.50s, short to 63.50. That's a nice 10-point rotation from the lows. We need to keep our eyes on these rotations. The question is, can we reach the target at 51, which is the close, or are we going to shoot into the gap? Well, obviously, if we shoot into the gap, I'll be stopped out way before that happens. But we're just gauging our short here based on the B period high, and based on the fact that in the A period, this is where the trade went from passive to initiative, from the 65 passive to the 65, 64 area for initiative, and then from that area we went all the way down to the D period low at 54. So here we sit with our short 63.50s. The I period just opened up. We need to get through this area of this cross trade. I was almost going to liquidate this trade for a couple points because this 2100 cross trade seemed to stop the momentum. If we can break down through this, then I think we're in good shape, at least toward the 59s. 59 is a big point, a big volume point. Pause the video. This trade is not doing what we anticipated. I am very tempted to get out at the 62s and take a couple points. We're out at the 62s. One third. Well, I can't talk today. I shouldn't be trading at all. We didn't get filled at 62 yet. Could have got 62 and a quarter. Take 62 and a quarter out. We'll pause the video and see where this market runs for a little bit of self-analysis here. Look at that, they're hitting the bid now. 61 and a quarter, they chased me out of that trade. $61, 60. And all we could think about was them attempting the yak period to run into the afternoon and test the gap. We changed our view there from closing to closing gap. We'll pause the video and revisit in a minute. Well, our entries seem to be pretty good, and our exits actually stink. So that's something that we have to visit, and tried to almost hit it this morning and almost hit it now, but I think we missed both. We've got to pause video, or actually produce